Surprise! How you doing? What's up, everyone? Good to have you here. Look what arrived. Look what arrived. The day arrived just before I went live. The caps with the embroidered Koens logo, you know? Oh, man. So, a nice sticker. You can, of course, get that off. But, it literally arrived just before going live. And the winners of the giveaway, when I did the 10K giveaway, will, of course, receive a cap. And that's at the moment what I don't have a merch store or whatever, but it's actually a cap that fits me as well, which was the problem with the other caps that I ordered. And the other caps had print and not an embroidered logo. So this is embroidery inside the gap, and it is low profile as well, with a lock, of course, in the back, and this one, of course, has to go in there, but very, very, very nice, and it was worth the wait. So very nice. Now, of course, I always wear my caps the other way around instead of having the thing at the front. So maybe one day for myself, I actually need to put the logo like here. You know what I mean? Like actually here or somewhere like that. But at least you can now see what has arrived by mail. So yeah, very exciting about the fact that the caps arrived. So that now means for the giveaway winners that the caps will be packed together with the handwritten letter and will be sent to you. And maybe a Band-Aid is one of them. So it's coming your way. It's nice, low profile. It also fits me, and that's more like, I don't know why, but the other caps were too, I don't know how you call it, too deep. The crown was too high, so they fell on my ears. But this one actually fits, so I'm very happy, very, very happy. So what a way to start the stream. Package literally arriving just before, so you can see got all the caps over here, 6 caps, and these will be sent across the globe to the giveaway winners. So how you doing, everyone? Good to have you here. Good to have you here. What's up? Crypto Aman, Saragas, Solivian. Welcome, Mr. Balls. Rostam, how you doing? I'm Anatia. What's up? How you doing? How are you doing, actually, as well, with the content that you've been consuming most likely in the past week at least? Bettina, welcome. Cheers, Rostam. Particles of Time. Good to have you here. You should see everything in Discord now, by the way. So I just replied by email as well. Adam, welcome. Brahim, welcome. Good to have you here as well. Christian, I miss not being able to watch your lives on the weekend. Damn work. It is the work, eh? I also, of course, live stream in the middle of the day. So probably many of you are working or something going on in Europe, in the Netherlands. I mean, it's literally working time. So Craig Mason, how you doing? Give me that head. It's a nice one. Not gonna lie, I like it. Alexis, how you doing? Ekaterina, Eddie, Ren Buffin, Smith, welcome. Good to have you here as well. Ben, what's up? 212 Moe, welcome. JP, good to have you here. While live, I can't like it. Stream only. I have the option to. Something has changed on my YouTube. While live, I can't like it. Stream only. Oh, you can only like the stream after. Well, thanks for the like anyway. And also always your comments, right? Rob, welcome. C'est moi. Bonjour, monsieur Koen. Bonjour, how are you doing? Good to have you here. Harut, good morning. Paramis, good morning. Crazy Potato here once again. Keep watching, Christian, and you can quit work. One day, right? One day or day one? Mike D. Cap stitching looks good. Yeah, can't complain, man. Like, it literally arrived by mail, and I'm very happy with the stitching. So it's very good. I also ordered one for myself, so don't you worry. You're not gonna get this one. This is gonna be mine, and the other 6, they go out. Yeah. Very, very nice. AE, we need help at direction. Probabilities locally remain higher to sooner or later still take the double bottom, even if you do move up. But I do have some thoughts that I like to share, right? So we're going to go over the Elliott Wave analysis. Also have work, but work from home, so I can watch. That's the benefit nowadays, right? Especially after COVID, many companies innovating with online services, working from home services, that sort of stuff. Also helps with lifestyle. You don't necessarily have to live close to the office. Adam, they're good later too. Just put on live. Yeah, exactly. No, it's all good. Cheers. Welcome, everyone. Cool. Let's start. So in this live stream, what we're going to do is, of course, cover Elliott Waves, right? And I'm going to cover the weekly down to the 50-minute, what we're looking for locally. Just to summarize the probabilities on the 15 really quickly. We had an 886 touch at the low. Naturally, therefore, the probabilities are higher to sooner or later take the double bottom, even if you do move up. So that is important to know. Arguably, we have a finished ABC here, right? Potentially for then a flat W, 1, 2, 3. I don't know. This has to be a 4, very small 4, 5. So this so far looks very corrective. Potential 3-wave up or flat, 3-wave move down again, and then possibly a diagonal here for an ABC, who knows, but we hit the 886 at the low. We're going to do a little bit of research during the live stream here as well, but the fact that we hit the 886 increases probabilities to sooner or later take the double bottom, because the 886 is rare for 2 and common for a wave B or X, so any move to the upside of coming off the 886 has a higher probability of being a wave C or a wave Y, increasing probabilities to sooner or later go down and take the double bottom. So that is basically the 50-minute time frame summarized, but we're going to talk about the weekly, then the daily, 4-hour, 15 minutes, and go into chatting and Q&A before I then continue with recording some new content for the gold membership at the moment, which will be exciting for everyone as well. Christian, welcome. Good to have you here. Another Christian, many Christians out there. Welcome. What's up, man? So let us begin. It is currently 13 minutes. Perfect way to start. Okay, so the bullish scenario on the weekly time frame is a bigger impulse to the upside. Currently inside the yellow wave 3 is what we're looking for. 1, 2, 3, 4, 5. Common target area for 4, 38205, taken from the low of 2 to the high of 3, which has been touched. And preferably in this scenario, would be good to see this low over here being the low for your wave 4 and continuing up for your wave 5, and therefore ending your wave 3 in yellow, right? So we're then looking for an impulsive structure on the lower time frames. Now if we then go to the 4-hour time frame and we zoom in, then the price action from the 56k low to the upside can be counted as an impulse in a wave 1, 2, 3, looking for 4, and then eventually a wave 5. Now here we then have our common target area for 4 is the 0.236 to the 0.5, taken from the low of 2 to the high of 3, 69.2, 66k. We already hit the 0.236, by the way, acting as a little bit of a support here locally, but as mentioned, we did hit the 886 over here, right? Very, very locally. I'll say it again once we zoom in, which does increase the probabilities that this is not yet finished, which is also preferred for this wave 4, as more commonly a wave 4 is longer in time than a wave 2. So if you take a fib time from the start to the end of wave 2 and then put it on top of your wave 3, you're going to compare 2 with 4. Preferably your wave 4 would end after the 1-to-1, which is Saturday the 25th of May, 10 a.m. But the minimum target would be the 0.382, and it is the 22nd, which is today, at 6 p.m. Central European time, which is in 2.5 hours, right? So that is something we keep in mind. With regards to support inside this area, if price moves towards the downside, of course, first of all, you have a potential support resistance flip, right? You have the range over here right on top of the 382 at about 67.4k, but then you have the blue box 66.1k to 67.1k. Invalidation for this scenario is price moving down and touching the high of wave 1, because in an impulse 1, 2, 3, 4, 5, we don't want overlap between 1 and 4. If that happens, we need to think about a double 1, 2 or a diagonal, but in both a diagonal and a double 1, 2, preferably your second wave 1, which then is this one, right? 1 2, sorry, that's in a double 1 2, in a 1 2 1 2 and then up in 3, preferably your second wave one is shorter in time and price, which it isn't, and in a diagonal 1 2 3 4 5, a diagonal, sorry, we preferably want to see overlap, right? Ta-da. In that case, preferably your wave 3 is shorter than your wave 1 as well. So that is why at the moment probabilities would be higher for this scenario here. 1, 2, 3 looking for wave 4 and 5 with an unfinished corrective structure on the lower time frames. As a side note, the most bullish scenario is a double 1 2, 1 2 1 2 up in your wave 3, where you want to see price increase or move towards the upside with increased volume. But I don't like probabilities are not high for this scenario because of your wave 2 not even touching the 0.236 retracement from the low to the high of 1. The common target for 2 is the 0.5786. Well, we clearly didn't touch that. A uncommon target is the 382. It's very rare to even hit the 0.236, let alone not even hit it. So yeah, the preferred bullish scenario at the moment locally would be this 1 2 3 4 and then eventually wave 5 to the upside, likely going to reach new all-time highs. On the 15-minute time frame here, we touch the 886. So that increases probabilities that this is not the low, and you're going to be looking for an impulsive structure to the upside from this low already, because then you would be looking for wave 1, 2, 3, 4, 5, but the 886 is rare for 2, common for a wave B or X, so any structure afterwards has a higher probability of being corrective, increasing the probabilities to sooner or later take the double bottom. Now we do have some resistance to the upside though, which is the blue box here, 70.8k to 71.1k, right? So something that we keep in mind. Very nice. Then we zoom out once again to the weekly time frame and talk about the bearish but eventually still bullish scenario. In this weekly bullish scenario, you have a simple 5-wave structure. In this case, you're only going to be looking for one more surge towards the upside in your 5. However, preferably, your range isn't yet finished and you continue this range. Common target for your wave 4 is the 236 to the 05, 62.3 to 49.3k, taken from the low of 2 to the high of 3. Invalidation 43.5k. I got it. So look, you heard an alarm going off, which is actually my desk. I have an electric desk, like a sit desk, whatever you call it. And I pressed some buttons because I wanted to change level 2. Like if you press the 2 button, it goes to my standing level, but I wanted to increase it a bit. I pressed some buttons because I forgot how it worked. And now I somehow activated an alarm, which goes off after 45 minutes. Anyway, that's what you heard. So invalidation 0.618, 43.5k. Now, as mentioned, preferably we continue this range a little bit longer because the low here has been made before the 0.382. Most commonly, a wave 4 is longer in time than wave 2. Take a fib time from the start to the end of 2 to the end of 3, comparing to with 4, and the 1-to-1 is sitting on the 12th of August. The 382 would be a minimum relationship between the 2 and 4, 6th of May. Right, so preferably we continue this range locally, where it's always good to not have a bias, right? We have probabilities, but emotional bias neutral. So we always have to think about bearish scenarios, right? Even though locally here, probabilities at the moment are higher. This is a corrective local structure down. I'll talk about that in a second, which does decrease the probabilities for these scenarios, but still, we need them, because we always need a bullish and bearish scenario. Bearish scenario on the daily is that we are looking for a bigger 3-wave corrective structure, A, B, C, arguably still WXY, but it leads to the same thing, price moving to the downside, right? Common target for your wave B as well as the next 886, right? 71.9k, and then you're going to be looking for price to move towards the downside, in this case in a wave C, which is an impulsive structure. Also, if we would be looking for a WXY, you also want to go down, preferably starting with impulsive structures, which means one of 3 scenarios on the lower time frame. you're either going to be looking for an impulse to the downside, which is a 5-wave structure, 1, 2, 3, 4, 5, no overlap between a 1 and 4, a diagonal, a leading diagonal, 1, 2, 3, 4, 5, correction, continuation, or a multi 1, 2. 1, 2, 1, 2, maybe another 1, 2, and then eventually a big move down. In this particular case, preferably, we're then looking for a impulse to the downside. 1, 2, 3, sideways correction in 4 and 5. However, this wave 2 is incredibly long in time. It is 11 times longer than your wave 1. Take a fib time from the start to the end of wave 1 to compare 1 with 2. And that is rare, very rare, that a wave 2 is that long, right? The common target for your wave 2 time-wise is between the 3A2 and the 3, right? The moment you go to 4, already long. Most commonly is actually the 3A2 to the 2 fib time or even the 1 fib time, because a wave 2 most commonly is a short, deep, simple corrective structure, right? Compared to a wave 4, rule of alternation, no? So 11 times longer than your wave 1 is incredibly long, which does decrease the probabilities for it to be a wave 2 compared with this being a potential B for an ABC to the downside, right? So that has an impact on the probabilities, as a wave B, more commonly compared to a wave 2, is longer, right? So both a wave B and a wave 2 have a minimum target of the 3A2. It's just that if you do get a very long range, the probabilities would be higher for that to be a wave B compared to a wave 2. It's just probabilities. So then what we're looking for in wave 4 is a sideways range to form and then another move to the downside in a wave 5. If we compare wave 2 with wave 4 at the moment, we take a fib time from the start to the end of your wave 2 to the, you tell me, the end of your wave 3. So let me actually click it there quickly. Because of the amount of volume in the low, I prefer to not end wave 3 here, because inside a wave 3, we're looking for an impulse, 1, 2, 3, 4, 5. And an impulse generally doesn't end on the highest amount of volume. A wave C can, but an impulse preferably is a 1, 2, 3, 4, 5 wave move, highest amount of volume in wave 3, and then you make another low on lower volume. But here you make another low on higher volume, right? So preferably we are then looking for 4 and 5, where we have then either a potential flat here. So yeah, I could say in the middle, because it doesn't really matter overall, all right, too much. If we put the fib time here and we do the 4, then currently we are behind the 1 to 1, which is fine for a wave 4. And if we drag it to the right, we're also behind the 1 to 1. So yeah, it's still wave 4 price action. It's fine. By all means though, in this wave 4, you want to take this low first before touching the 618. If price moves up and touches the 618, probabilities increase that this is a 3-wave structure to the downside, which in general already has higher probabilities because of the length in time of this wave 2. So this being an ABC, higher probabilities compared to this being part of an impulsive structure, just because of your wave 2 being so long. What you can also see is that we touched the 886 here at the high. So we have an 886 at the high and 1 at the low, right? So that is why in the probabilities this morning I mentioned, well, probabilities are higher to sooner or later take the double bottom. However, we might first move up to take the double top, because here we have an 886 as well, which decreases probabilities for a local impulsive structure to the downside, increasing the probabilities that this here is also corrective, which in turn again increases probabilities to sooner or later take the double bottom, double top. So lots going on, of course, right? Lots going on. With regards to the CVD divergences, I actually want to have a look at CVD. What is it doing now locally? So preferably inside this range. Okay, we have bearish CVD divergences here, lower high on price, higher high on blue. That is a local bearish CVD divergence here, right? Target would be this small low. We have a bullish CVD here. However, this bullish CVD is countered by the small bearish CVD. So in other words, we have a bullish CVD here, target would be the high, but now we have a bearish CVD here, right, which is countering the bullish one. The more local, generally the more important the CVD is. Oh, we also have a bearish CVD on blue. Not with this high, but we do have it with this high. Yeah, so we have two bearish CVDs and we have one bullish CVD. Now, with regards to the 886 touch at the bottom and probabilities locally still higher to sooner or later take the low, the bearish CVDs are a nice little bit of confluence, I suppose. No? We do have some news later today, 8 p.m. Central European time, right? The FOMC minutes. Not sure how much it's going to do, but we'll see. It's good to at least be aware. So if we do get some volatility, make sure you manage your trades safely. So if we then talk about the probabilities, actually nothing really changed compared to this morning. So on the weekly time frame, probabilities are higher for the bullish scenario compared to the bearish scenario, right? So you have your wave 4, look for another 5, 4, 5, right? That's the first scenario I've shown. Second place, the bear bull, meaning we continue this range. On the 4 hour, at the moment, probabilities are higher for this to be an impulsive structure, 1, 2, 3, 4, 5, compared to this being a zigzag in an ABC. And that is mainly because of what we see locally, which at the moment has a higher probability of being corrective compared to it being impulsive because of the length of your wave 2 in time. That's an important one, right? And on a 50-minute, you got an 886 touch, both at the local high and the low. Probability is high to sooner or later take the double bottom. All right. However, possibly we first take the double top and then go for the bottom, which makes it interesting with regards to support and resistance as well, because we have some resistance, we have some support, and could potentially look for continuation. So yeah, as long as we don't see clear signs, clear bearish signs locally, the probabilities are simply higher for higher. And also if we are looking for prices to move down a lot lower, we definitely, as a bare minimum, need a impulse to the downside, right? So at least one more low for a 5-wave structure. 1, 2, 3, 4, 5, and then eventually a retracement. So on the 4 hour, right, probabilities, or on the 50-minute, probabilities are higher to sooner or later take the double bottom. And if we do, then we are simply going to observe what happens next. So the support to the downside, there's not too much on my chart that I have over here. So arguably you have a bit of a support resistance area here. However, quite quickly we'll end up at the box that I have here. The most bearish scenario would be a double 1, 2 here, 1, 2, 1, 2. However, your second wave 1 is bigger in time and price compared to your first wave 1, decreasing probabilities for a double 1, 2. So, yeah, it's all probabilities, no? And I do like to take it step by step, even with Elliott waves. Right? So probability is higher to sooner or later take the low, and if we then do take the low, we just wait. Right? We wait and see what price does. As long as price is moving and we have volume increasing, we just wait for a range to form and then we'll take it from there again. Keeping things very, very simple. So, voila. Double top is this one here at 70.4K. Double bottom is here 69.1K. That's the one I meant. Blue versus yellow CVD both have the same importance, but it's about context. If you get a bullish CVD here, but price touch the 886, the probabilities generally are higher to sooner or later take the double bottom. So if you then with bullish CVDs move up, but then start to create bearish CVDs here, then you're like, okay, now we got one bull, one bear CVD, right? Equal. But then if again more locally you get more bearish CVD divergences, the bears start to overpower the bulls. No? And that is something that can happen both on blue or yellow. Now the local bearish CVD divergence here has now played out because we took that low. So yeah, that's currently what we're looking for. And yeah, chatting and Q&A is next. Elliott Wave analysis. When did we start? At 12. I think it was maybe even minute 13 or something. I'll put the timestamp in the live stream later. Pin message. Oh, very nice. Let me quickly see here. Where were we? Hello, I never knew Elliott Waves. After watching your videos, I'm very eager to learn more about Elliott Waves. Keep it up. There you go. We are converting people into new Elliott Wave fans. I like to see it. Yeah, cheers, I bet, Yegi. Great to hear. It's an amazing tool to have in your pocket. It's, of course, a lot of theory. It's a lot of studying, but it will pay off. At least in my opinion, it does. Right. So it's you should enjoy the ride. If you enjoy learning, if you enjoy studying new things, then yeah, Elliott Waves is great. Christian, welcome. Bilyamin, welcome as well. Good to have you two here. Yuki, stick around and join Discord. It's a great place to learn Elliott Wave and hone in on your strategy. Cheers, Adam. Yeah, in Discord as well, right? Many people share insights with regards to their Elliott Wave counts, and I'm also there answering questions and whatnot. So all the Christians, yeah, I know, right? So many Christian names here. Ace Winner, I love an honest guru. What's up, Ace Winner? Always a pleasure. Always a pleasure. I swear I just got up to check my fridge. Door wasn't left open. So many idiot YouTubers uploading videos with clickbait titles like Bitcoin is going to 80K, no one knows. And that's why I watch your channel, because you're always open to both scenarios. Cheers, Ace. Yeah, so at least from an Elliott Wave point of view, but I would say from an analyst point of view, you always need a bullish and bearish scenario. But then based on the Elliott Wave count, you need to be able to correctly identify the probabilities. And with Elliott Waves, when someone new starts with Elliott Waves, right, subjectivity is very high while skill is very low. But the more skillful you become, the lower the subjectivity becomes, right? It will never be zero, never 100% zero, right? Because you're still counting ways, which is a human thing. But the better you become, the better you know the rules, the guidelines, look at volume and whatnot, the lower your subjectivity becomes, and the better you'll be able to give probabilities, which in the end might impact your trades in confluence with other tools and other things that you like to use. Yeah, Hira, welcome. Good to have you here. When wave 5 will happen? When wave 4 is finished. So we preferably first wait and see till wave 4 is in. Right? So and I mentioned the time. So preferably a wave 4 will finish at least after 6 p.m. Central European time today, which is in 2 hours and 15 minutes. Commonly, wave 4 is longer than wave 2, which would be wave 4 ending after Saturday. Yeah, we'll see what price gives us. No, it's all probabilities, and yeah, this is of course what we're looking for. Adam, good luck with your work. Answer this one. We could have written WY for the small 4. A W, oh, like here, yeah. So WX and then a potential zigzag in a Y. Yeah, I would like this low, like, to count it as a flat in that case. So you have your A, B, possible C, even in your C, 1, 2, 3, that's a very small 4, and I don't like truncations because truncations are very rare. So there's always that possibility. But yeah, you could have a flat X, Y, and down. Yes, true. So confluence with the bear CVD, 886 touch at the low. I mean, yeah, it's definitely an interesting scenario for that potential 4 and a 5 down. If we do eventually, so there's still WXY probabilities here as well, of course. If this turns into a 5-wave structure, like more confident, we need more confidence and more price action for this, because wave 2 is so long in time, it decreases a wave 2. But if you do get a 5er and a 3-wave up, this is going to be either a wave 1 or it's going to be a wave A. A is bullish, 1 is bearish, right? Because then the retracement will be 2 or B. The main thing I keep an eye on here is if we do not wick the lows, there's not much left here. There's not much holding price really in that area. Yeah, and also just below the double bottom here, we also have the value area high. So that's it. So if you don't wick the lows here and move up, yeah, probabilities are high. You're just going to move back towards 67. Right. You also have the point of control there. Oh. Answer that one. Maybe we can have a double zigzag on the fin with maybe triangle on X or other complex structure. W, yeah, I agree, Bettina, and I would be looking for a complex structure in that case. So in that case, you have your W, you get your X and your Y. Yeah. Not a big fan of triangles unless wave D is in, which it is not yet. So I would prefer to wait. Yeah. What's your idea of confirmation as a time to take the trade, or is it always a risk? Of course, what maybe a Band-Aid says is true. Like it's always a risk, right? Any trade you take is a risk. So that is why it's so important that when you calculate your position size, which you should do for a trade, you base it on your loss. How much am I willing to lose with this trade? And usually it's a percentage of the portfolio, like 1% is very common, right? So, hey, I'm interested in a trade. I'm willing to risk 1% of my portfolio, right? Which then depends on your stop loss size. And because of your stop loss size and the risk you're willing to take, you can calculate your position size. And then you can enter the trade with a 1% risk. But because you already know how much you're risking, you can be, it helps with emotions as well. Now, with regards to my idea of confirmation, it's the tools that I use. So it's everything you see in my videos that I use in my trading. It's the horizontals, right? It's the volume levels, volume profile, Elliott waves. It's all CVD, all the stuff you see is stuff that I use in my personal trading. Yeah, interesting ideas are dropping and dope pumping, even though Bitcoin isn't really doing anything. Bitcoin going sideways. What is the target for a macro, a 5th wave? Because on the weekly time frame, wave, so it depends on the scenario, by the way. Because here, in this scenario, there is a possibility for wave 5 to be the extended structure, because your wave 1 in green and 3 in green is quite similar in length, in price, on the log chart. So that it increases probabilities that wave 5 has the potential to extend to much higher prices. In that case, your wave 5 is ridiculous prices. But if we look at the normal wave 5 target area, we take a trend-based FIB or a normal FIB from the high to the low of your 4, toggle on the 5, 1.236 to the 1.618. Then a trend-based FIB from the low to the high of 3 to the low of 4, and then the 0.618. And then we also do a 1-to-1 trend-based FIB extension from the low to the high of 1. I'm never really sure which one to take here, either or. whatever, it doesn't really matter too much, really. And then put it on the low of your 4. And then you get your target area, which is between the 1.236 and the 0.618, which is between 78.5 and 111K. And after that, you still expect another 4 or 5 in this scenario. You can do the same, of course, with the bigger wave 4, but then we first need a continuation of the range. So we need more price action, and that is, it's not yet relevant because there's no confirmation yet that we continue this range for a bigger ABC or WXY. So yeah. BTCC. What's up, guys? How you doing? Makes me think I gotta add the links in Discord and the description. 1 second, I got a notice. Gotta write it down. So much to do. I'm really focusing on finishing Elliott Wave's educational material, also for public YouTube. Surprise, surprise. But I do want to say, where am I going to write that? Oh, yeah. 1 second. Okay, so we have BTCC. Okay. There we go. I always like pen and paper. What's up, guys? How you doing? So BTCC is the platform I recommend if you're Dutch, UK or US, and you're not able to make an account on BingX. BTCC has been there since 2011 or 12, guys. I think 11 even, right? It's one of the very well-known platforms. So and they're popping in. Saying hi. Anthony Cook can totally see the high probability for high price at the moment. If it drops below 69.1, it's more likely for 5 waves down, as you said. If it drops below 69.1, which is the highest probability, you can still have a WXY for a double zigzag. Right? So you can even have a WX and then still a flat structure as well. A, B, C, W, X, right? W and then your X and then A, B, C. It's also, that would be fun as well during the weekend. So there's still enough opportunities for corrective structures, especially because of the length of your wave 2 here. So it's not set, but it depends on the move, right? And that's why I like step by step. Even with Elliott Waves, we are reactionary, I suppose is the English word, where we have the probabilities, we identify them based on the scenarios, and the moment a probability plays out, right, we just wait and see what price is going to do next to then reanalyze, especially the local price action. But of course, what happens locally impacts the higher time frame probabilities. So yeah, we hit resistance here while also touching the 886. The 886 on a high time frame, that is on the daily, increasing probabilities to move to the golden pocket. The golden pocket is here, by the way, on that daily time frame, which is pretty much at the support box that I have here as well. And we do know there's not too much support here. So yeah, it will be interesting to see what happens. Barbie, what's up? How did you learn Elliott Wave analysis? I like this question. So I learned it by studying with a notebook and a pen. Yeah, so wait. 1 second. Let me find the page. The first, I sometimes show this on stream, the first ever Elliott Wave drawing I made years ago is this. Right? Yo, 1, 2. Impulsive wave. Some rules there. First ever drawing I made with regards to Elliott waves. And I always have a notebook. I have multiple notebooks. What I recommend, how I learned it is I studied information I found on websites, info that I found in the book, Elliott Wave Principle. But what I can recommend based on my experience is to go to the description and scroll down a bit till you find Elliott Wave Education, right? It's a title. Go to this website, which is by far the best website that I have found when I studied Elliott Waves. So this one is almost complete. A few little tweaks and things, but it's a very, very good website. It's public, it's free, it's whatever, it's just very, very good. So get this one, get a pen and a notebook, start writing everything down, draw the scenarios, right? What's a zigzag, what's this, what's that. And a nice to have, but not a must have, is the Elliott Wave Principle book from Frost and Prechter, link in the description as well. The content you find online is more than enough. And if you're looking for more feedback and guidance, then of course the gold membership would be the place to be on this channel. Alan, welcome. Koens, my highest win strat has been single print liquidity over the years, and it was single print liquidity sweeps. So I suppose if you talk about single print liquidity sweeps, you're talking about gaps being filled or wicks being filled, I suppose. Any advice on a specific Elliott Wave idea that often is in confluence with those structures in mind? I would need confirmation if a single print liquidity sweep is indeed, because of course if you have a very quick move, boom, then you have single prints, right? And then you start ranging. And then if you come back and test the gap once, you often get a reaction, but the moment you close a candle inside, probabilities increase to fill the gap to the downside. And from an Elliott Wave point of view, it's very context related, because that quick move up, right? So if you have your, and then you have a quick move up and you have a single print box here, right? Then you're either looking for a wave 4 and then a 5, right? But if this is A, B, C, you move down, potential 1, 2, and you test it again, close candles, increase the probabilities to move down and correct the whole pattern. So it depends on where is the liquidity sweep. Is it in a wave C? Is it in a wave 3? Right? Maybe in a corrective structure like a wave C of a flat. No? It's not one scenario. What's up, Maurice? How are you doing? What is the dip of wave 4? If we're talking about the bullish scenario, then this is your target for your wave 4, 69.2 to 66K. Needs to be a 3-wave structure. If the price reaches 73K, should I TP 100%? Depends on your plan and your strategy. Right? If you have a plan and based on your plan and your strategy, 73K is at TP 100%, you should do that. Right? Karin K, hi Koens, long time lurker, first time riding. What's up? How are you doing? I've watched your CVD video a couple of times. It's really helpful. What's your experience using open interest? Cheers, Karin K. Nice. Welcome, I should almost say, because first time riding, but long time lurker. So good to have you here. Thanks for your message. Now, CVD with open interest is an interesting one. And let me quickly find some data for you, because I sometimes get this question: is open interest relevant with regards to CVD? Now, I have collected data about this in the past, and I did not find a significant statistical advantage of using open interest, but it does add another tool. So it adds complexity, but did not give me a good enough statistical advantage. So eventually I decided not to include it. but I am going to try and find it. So 1 second. I know my face is on the stream, not anymore. Let me quickly try and find statistics. Okay, it's not this one. So I'm just quickly checking. No, it's not this document. I have so many statistics documents. It takes a little while. Oh, here we go. Found it. 1 second. It's so this is how I started collecting lots of data back in the day, including open interest. However, based on the eventually results, and I know it might not be clear exactly what I've tracked, but I've tracked open interest with CVD, and generally there's not a great advantage probability wise that really gave me confidence, like, oh, I can use open interest with CVD. I'm pretty sure people can make it work, right? That if you do get a retracement and you do see a CVD divergence and you see open interest increasing, it means market orders are opening. But if you're not moving down, it's being absorbed, right? So arguably, a CVD divergence with absorption and open interest increasing would increase probabilities for a CVD to play out. I mean, naturally, but based on probabilities, I didn't see a statistical big advantage. So I'm pretty sure, I mean, one can make it work, but it's not something that I personally use. But I guess you can use it in Confluence with CVD. Yeah, I don't see a reason not to, except for the data in my case that it wasn't a big enough difference. Hunter, welcome. Antonin, pleasure. Raccoon, what's up, Mark Dutch? What's up, Mark? What's up, Mark? John, how are you doing? How are you doing? Actually, someone I know. Another Trackmania professional. I used to be a Trackmania pro, by the way, for 11 years. And another pro lives in the south of France. He's going to move to Australia. I had to think of John. Was there 2 days ago in London. I see. Okay, Tino from Trace Reality. Yeah, I mean, so they have an office in London, which is very nice. It's across the pond, right? It's easy travels for me as well. So yeah, it's a great company. Market makers love to go on liquidity hunt at position where retail jumps in, and a lot of retail trades take their position based on what's the most popular scenarios on YouTube or TradingView. Yeah, I mean, it's always important to have your own plan and strategy. The big problem is that most people are usually quite lazy to develop their own plan or strategy, or they don't want to learn, they skip the process. But becoming long-term profitable can, in my opinion, only be done by having your own plan or strategy. It's no problem to use things in Confluence, right? You can learn a strategy like Elliott Wave. You don't have to develop a whole new thing yourself per se. You can look at, oh, that's a profitable strategy, I can use it. But trusting yourself, right? Having your plan, your strat, that's so important for long-term profitability. And also with your confidence, you know your plan, you know the data. It will help with your emotions. It's so much better. Liquidity heat maps is a really good way to take trades. Yeah, so I use Elliott Waves with my boxes and horizontal levels. Yeah. Milo, what's up? How you doing? Welcome. Grab your popcorn. RS Miller, welcome as well. Cheers, Noto. I've been using it. Cheers for that. Pleasure. Good to hear. Good to hear. It's a great website. Context is key. Yeah. Yeah. So a big liquidity, like single prints, depends on the structure that we're looking for. So arguably here, right? Single prints. No, there must be some in this area. So you move in, you move out, you move in again, you fill the single prints, right? So yeah, which can be the end of your 3 in this case, 5 of 3. But you can also have a flat, right? So A, B, C. Wave C can create some single prints that you then fill on the way back up. You can have a zigzag A, B, C. Single prints in C, single prints in wave 3 of A, right? You can have, of course, an impulse, 1, 2, 3, 4, 5, single prints in your wave 3. So it depends on the context. Yeah. They are very good support resistance areas as well. I remember one in particular, which was very nice. It was here somewhere. One of these, I think, one of these ranges, I'm not sure which one it was a gap. The top of the gap was touched and we took off. I guess it was here. So at that moment in time, we also had a bunch of single prints, either here or here. I'm not too sure. But then we touched the top of the gap and off we went. We never filled that gap. Well, the small bearish CVD divergences played out, and now price is just ranging. Not much happening. Huh? We still got the bullish and bearish CVD. Bearish, bullish. So low time frame move down here looks like a really good leading diagonal. The move down here, this one, yeah. Of course, this structure up looks like a potential diagonal, but I don't really count too low time frame. Like this is the thing. The moment an 886 here is touched, I'm like, okay, we know the probabilities. I don't necessarily have to count everything in detail, unless price is continuing this range for a long time. That is when I'm going to be motivated to count everything in detail, but it doesn't change the probabilities unless you have a W and then your X and a Y, where Y does not take the low of W. Doesn't happen often, but it can happen. So and yeah, or you have an ABC finished and then you move up in 1-2s and your wave 2 hits an 886, but that's rare as well. So it's just probabilities. Yeah. Should I short or long? Depends on your plan, Dork Knight. So what I recommend, I think it's a good moment to talk about this as well, is to develop a plan. Now, many people here will know exactly what I'm going to say, but I recommend to get your notebook out and write down the number 1 to number 6, because I'm going to give you 6 steps. 6 steps that will significantly increase the probabilities to make you a profitable trader. Who wants to write them in the chat? You can write with me, or grabs popcorn. I know. So Dork Knight, it will take some time, but if you want to be long-term profitable, it is very helpful to avoid these questions, and you can only avoid it by having confidence in your own plan, your own strategy, which you don't have, so I'm going to help you make one. Step 1, try as many free tools as you can. The tools in TradingView are free, right? TradingView is free. You don't have to pay. You can if you want to, but they're free. So try as many free tools as you can, as well as the free indicators, right? Step number 2, find your favorite tools and build statistics on those tools. I just showed you one of the statistics that I tracked in the past, which is CVD. And I was talking about CVD in confluence with open interest and what the statistics showed me, right? So find some of your favorite tools and build statistics on them individually. Step 3 is combine some of your favorite tools and build statistics on the combination, because now you're building a strategy, right? Step 4 is tweak and adjust. Add a tool, remove a tool, and build more statistics and see if you can improve the risk to reward ratio, if you can improve the win rate, right? The amount of trades, maybe less or more, depending on your lifestyle. Then step 5 is start trading your strategy with a low amount of money and work on trading psychology. The Mental Game of Trading is the best book I can recommend. Link in the description. You also have Trading in the Zone, also in the description. But Trading in the Zone, for me, Trading in the Zone, it's not as good as a book, in my opinion, compared to the Mental Game of Trading. And then step 6 is increase your portfolio size, preferably slowly, so you get used to bigger losses, because getting used to bigger winners is easy. This is not a get-rich-quick industry, right, everyone? There's hundreds of YouTube accounts that might say, based on their analysis, X or Y is going to happen, and some people might try and follow this. The thing is, those people have their own plan or their own strat. I recommend to build your own. Of course, I have my way of trading, and I use Elliott Waves as well, and I trade Elliott Waves as well. Nothing I share is financial advice. You always need your own plan and your strat, right? So develop one, and it will take a while, right? It might take a month, 3 months, 2 years. In my case, Elliott Waves, till I got really confident with Elliott Waves, was about 2 years, and my other strategy that I have, which is based on data, took me about 1.5 years to develop. Yeah. So, yeah. Nvidia comes out with the earnings. Could some as well. What time, Mark? Because at 8 p.m. you also have the FOMC minutes. Mindless Musician, welcome. Too early for popcorn. It's only 7:20 a.m. ETH Macro, Sunday is going to be the altcoin stream day. My number one tip for trading, have a strong thirst for knowledge and work your ass off. It's not a watch a video once a week hobby. Absolutely correct. Risk mitigation über alles. That's German. As well. The Dogs 8, what was there? What is the breakout going? Where is the breakout going? We don't know, because it's all probabilities. But based on the probabilities, another thing I recommend everyone, do never think in certainties. The words will, right? Or the word will doesn't exist. What's that other one that many people say? Should, right? Oh, price should move to the upside, or should move to the... No, it shouldn't, right? Doesn't exist. Words that give you a feeling of certainty are wrong words in the industry. So where is the breakout going? Of course, we don't know. However, the probabilities at the moment are higher to sooner or later take the double bottom. What the hell, man? Man, I want to turn that alarm. I want to turn the alarm off my desk, but I forgot how to do that. It's actually really annoying now. I don't want to, have it keep beeping. 1 hour after the New Year. Oh, that's 11 p.m. Yeah. What will be the effect of spot ETF? Yeah, I'm not into fundamentals. In my analysis style, which is 100% technical, it doesn't change anything. I mean, all the probabilities are playing out accordingly on the higher time frames. So it doesn't change something for my trading or type of analysis. When to start short? Muminex, if you were here 5 minutes ago, you have to develop a plan. So I'm not going to answer your question because it depends on your plan. If you don't have a plan, make a plan, right? So go back 5 minutes into this live stream, listen to the 6 steps, build a plan. Wish I told you why when it does it. We got, probably there was a word in there that didn't really, YouTube rules, chicken ready. Have a good breakfast, lunch, or dinner, robot. It's time for abs and chest exercises. Oh. always make some time for that. Karen K, thanks for your answer. Would you mind sharing your early experience, your method of testing tools and indicator step 1, and how you kept what you use currently? So I of course everything in detail is what I share in Diamond, but pretty much in step 1. Do we have some news now or not? Why are we? Not that we're complaining. Might actually hit resistance. Interesting. Didn't expect a move, but who knows? We might actually. Would be quite nice. Hit the resistance, observe the reaction, and if so, move down. But with regards to the question, so in step 1, try as many free tools as you can, which means in step 1, you first need to build experience. So you're going to use these, potentially watch a YouTube video or 2, and you're going to observe or use these on the chart and observe what you like and don't like using and what's respected or not respected based on your type of analysis and what you enjoy, yes or no. So step 1 is very much getting experience in the market and getting experience with the tools. And then you'll find out by using the tools, you will find out which one you prefer. So I like volume levels, and there's also tools that I build statistics on that I never use anymore, right? So, but it's not a waste of time. It's just being selective, and eventually you learn what you like and don't like. So in step 2, you then track the data of some of the tools that you enjoy using. And data, I mean, in my case, it's just an Excel sheet. So yeah, I just tracked it in Excel. I write down a statement, and then there's a couple of columns where I write yes, no, right? So you have a yes column, a no column, a total column, a percentage column. And then you write down a statement, which can be anything like, let's think of one. If price hits the VWAP, we get a bounce of 1%. Yes, no, total, percentage. And you just collect data. So you just backtest every time price hit the VWAP. You check, like, did it actually move 1% away from the VWAP or not, right? And that's one statement, but you can write 100, and then depends on what you want to track. Yeah. So yeah. And how I kept the ones that I like to use is based on, so first knowing which ones I like, and then see how the ones I like interact the best way. So that is data. How I kept the ones I use is data and experience, but data is important. Yeah. Aaron Thomas, welcome. Good to have you here. Jeremy, good morning, Papa. If you remember the 854 I had asked about, looks like we also hit it on my chart. It was bugging me that the AC didn't get hit at the top. So lo and behold, at the top, you mean here? No, it can't be. Here we hit the 886 at least. So that's a good one. But yeah, same with fibs. If you find other Fibonacci levels that work better for you in your type of analysis, start using them. Yeah. Jay Green, have you considered what your average monthly return is as a percentage, of course? It fluctuates, but it's very rare to have a losing month. The last arguably break-even month, because I think it was 1R profit, was December. Can't remember the last losing month. So But with regards to monthly return, I don't really calculate the average. I take it day by day, month by month. So with my strategy that I've developed based on data, I track the statistics of that strategy, right? And then the monthly return as well. But with regards to Elliott Waves, I actually never tracked my trades with Elliott Waves because I just trade the waves and it works. And it's not a strategy that's developed based on data. It's a strategy that has been out there for decennia. And I trade it, and I traded successfully for a long time already. So I never really got into tracking statistics. Maybe a bit lazy there. I tracked so many statistics in the past that, eventually you, once you got something going, you kind of stop tracking until maybe one day it might not work, and then you start tracking again to change it or innovate it. But it's not the case at the moment. So, I also don't really have a monthly goal. Any profit is profit. So it's still a market. It's still so. This is actually quite interesting. Sometimes I'm really surprised how many people are like, I need a minimum of 10% a month, right? Like, do you actually know how high that is? Now, 10% a month. I mean, look. I 10% a month, there's many months with 10% in my history. However, if you look at what you get on a yearly basis when you invest in markets, 10% is high, right? So 10% in a month minimum. If you start out as a trader, let's first try and achieve 3%. That's already something, and then from 3 you can tweak a strategy and try to improve it to 5 and then to 7, and it takes time. But if a strategy is not giving you a high percentage return but it's still profitable, you're good. Let me check my statistics of the so 1, 2, 3, 4, 5. So in 5 months, because May isn't finished. So in 5 months, the average win rate is 62%. RR is 50 out of 34 trades that are win or loss, not taking the break evens into account there for the win rate. Now, RR, so December was 3R. So last month, April 24, right, with the strategy that's developed based on data, was 5R. Now, I'm pretty sure people are going to be like, 5R? Shit, man, that's slow. I'm not going to, trade for 5R a month. Kek fucking W. You better be happy with 5R. But there's also months. I also had a month with 18R and 14R, right? But I also have a month with 3R in December, 7R in Jan, 5R in April, 18 in November, 14 in Feb. It fluctuates, but it's about consistency. Sometimes you'll have 1R, sometimes you'll have 20R, right? But it's about just having it. Like 5R is great. And you got to be respectful to the profit, I suppose, in a way as well, that, hey, at least you're earning something from the market, right? There's 90% of people that are losing. So if you make 5%, 5R, in that particular month, you are doing perfectly fine, right? And your portfolio size might be the limiting factor. So if you have $1,000 in your account and you're like, well, shit, I need to make 100% because else I'm not going to be able to buy food. Stop trading. It's not for you. Start earning money somewhere else first. Right? If you want to earn money with trading and actually take care of some of your finances and stuff, you probably need at least 20, 30K minimum into your account. Right? 1% of 20K is $200. So you would need at least 5 to 10% in a month to have a little bit, make it worthwhile. 50K, that starts to become more interesting. Having a 50K account, 1%, $500, make 3%, $1,500. Okay, that might be your rent, right? Done. But it's portfolio size. If you have a strategy and it's consistent, then the next step is work on portfolio size, and then just keep executing, but focus on the size of your portfolio. Because if you can trade the strat with $100, you can trade it with 1,000, with 10,000, with 50,000, with 100,000, but that 1% is going to increase each time. So regarding open interest, I was a futures broker many years ago. One of our clients was the author of a book about open interest. They were not particularly successful in trading. Yeah. I'm pretty sure that open interest can be used successfully as well, but it's about context, confluence, other tools. It's something that one can use, but not hyper focus on one particular tool. It's still contextual as well, but it's actually interesting. You were a futures broker and got in touch with that client that was an author. How interesting is that? Open your chart after. Also, that local top formation on my chart is different than others. Looks more finished, complete compared to other charts using the Coinbase. Oh, I see. Yesterday we were actually talking about Canadian dollar versus Bitcoin. Woo! What a wick, yo. What's happening here on a 3-minute time frame? Holy moly. Looks like a bit of a flat, no? A, B, C to the upside, immediately giving it back. Look at the volume as well. Wow, that's a wick and a half. I have no idea where the volatility comes from. I mean, the news here is 8 p.m. New York is open, so that's something, right? The markets are open. Maybe just simple liquidity grab some liquidity and move it. But what's up, Kevin? Did any? Yeah, I don't know. Not as far as I know. Yeah, better be safe than sorry. So yeah, no, I don't know. Not as far as I know. Fake out move. Yeah, possibly. Yeah. Liquid Mafia, how are we doing? We're doing good, doing good. How are you doing from the other side of the world, yo? Australia. Man, still got to visit Australia as well as New Zealand. It would be nice. Koen stream after uni. No time for homework. Time for trading homework. Heiko's just joined. Can it be zigzag X and now we are finishing triangle? Zigzag in X. So this would be your W. Then this, I guess, is an X in your case. And then A, B, C, D, E. That is a possibility, yes. In that case, you touch the 886, but you'll never break the double bottom. So a triangle in wave Y is the least common structure. Common is a zigzag, then a flat, then a triangle. But it is definitely a scenario, right? It's definitely has potential, yeah. So we do still have bullish CVD as well as bearish CVD, by the way. So bear and bull. Yeah, it's a bit of a mix. But I don't really, and many will know, I don't really like to start thinking about triangles if a triangle isn't very clear. So it has potential, yes. Create a special bank account and keep most there. Yeah, you can play with the leverage as well, right? 50K is what you can trade with, but then in an exchange, put in 10K, 5x, and then you have your 50K. All the live streams are saved. Yes, every single one I've done is saved. I don't remove any videos. I'm not like some of the moon boys. Remove moving a video, changing titles. No, it's all there. It's all online. It's the live stream will be there. Yeah. Yeah. So the triangle definitely has potential. It looks like a triangle, but if this is your X, we need an A, B, C, D, E, not break the low and move up. Or it's a wave 4, right? 1, 2, 3, triangle in 4, and then a wave 5 to take the double bottom. Yeah. On this local way down, we keep seeing those big spikes to the upside and then big V. What could it mean technically? Technically, liquidity sweeps. I mean, we had the same here. This wick moved above these candles and then continued to the downside. So it's like typical liquidity sweep. Highs, sweep, down, right? 2 highs, sweep, down. Couple of highs, sweep, down. Maybe here again. We actually just missed out on this one, but yeah. Sometimes, of course, some news can come out as well, and you sweep left, like highs and lows, left, right, and center. But on Fit 21, I have no idea what that is actually. Big bear CVD on a low time frame mode because of the pump and the dump. Yeah, CVD is not always as nice when there's very volatile, like big pump and dump type of price action. Triangle in wave 4. Yeah. So yeah, 1, 2, 3, A, B, C, D, E. Then this has to be either your end or close to your end. Your invalidation is 70.2K. So yeah. It's interesting price action for sure. Big high impulsive move. Currently a 3-wave move down as well. So far, interestingly, no bullish CVD divergences here during this interesting price action. It just moved back to the order block, found support. Interesting. I do everything myself manually. I calculate. So I do calculate my own positions. I just have my own calculator in Excel. And so what I do is I put in my potential entry, my portfolio size, right? And how much I'm willing to risk. And the stop loss percentage. And then it auto calculates my position size. We don't have a truncated 5 in X. Oh, you mean this high here? Yeah, there's the potential here for a flat ABC. But if that is the case, A, B, high volume B, C to the upside, it just increases probabilities that sooner or later you take the low here. Unless a W, flat X, and then you're going to be A, B, C, D. You still need an E. Yeah. The range starts to take quite long, of course, as well now. Solivian, what's up? XRP CVD, not as far as I know. I also don't trade XRP myself, so it's not really something that I use. On a 4-hour time frame, what about a 112 being now in our second wave 2 and then the 3 starts? Has potential, but your second wave 2 is incredibly shallow. So your second wave 2 didn't even hit the 0.236. So it has potential, but in both the bullish scenarios, we are looking for this high to be taken sooner or later. And then if we do, that is when we will figure out if we're looking for a 5 or a 3. So instead of covering all the options, I like to cover one option. Higher probability is a wave 5 because of the very shallow second wave 2. And if we do take the high and volume increases and it's very impulsive, we just look for a 3. But the direction is correct, and that's what's most important. Yeah, possible. Just back. I appreciate the channel very much. Great work. Thank you, sir. I have a question. Based on your strategy, which are your favorite tools besides CVD? Everything I use. Everything I show in the content is everything I use. I can't say in detail what the rules are, of course, but everything you see in all of my content is everything I use. So from that perspective, I'm very transparent in my trading. Everything you see in the content is everything I use as well. So, and then of course, then the next step is rules for the strategy, entry requirements for a strategy, and that is where the skill comes in, and the data, and and that takes a lot of work. So there will be many more people that use the same tools as I, but every single one of them can have a completely different way of trading. Messy price action on the very low time frame there. So we still have the bullish as well as the bearish CVD. So it's a complete mix locally at the moment. Bearish on blue, bullish on blue and yellow. So blue was first bullish but then turned bearish. It's just a messy price action, not interesting. Where is the end of the correction for Bitcoin? What time frame, JM, are you looking for? Is 15-minute like the more local price action, or the like 4-hour, daily, weekly? Oh, I got a missed call. Interesting. If it was important, they will call back, no? On the daily. Where is the end? So there is already, of course, a potential end. Right? Corrective structure, the beginning of a new impulse to the upside. Alternatively, you have a bigger three-wave corrective structure, and in that case, the end will still take many days, probably weeks. Now, currently, as we are at a decisive area on the chart, that's where probabilities, so the local probabilities influence the probabilities on the daily. As either we're looking for the double 1, 2, or sorry, 1, 2, 3, 4, 5, continuation to the upside, new all-time highs, or a bigger corrective structure. At the moment, locally on the, well, arguably 4-hour time frame, I suppose. No, I should go 50-minute time frame. The probabilities are higher that what we are looking for here is corrective and not impulsive, which increases the probabilities to sooner or later take the high again. The reason probabilities are higher for this to be corrective, right, or pretty much all of this, just the retracement to the downside, is mainly because of this range being so long, increasing the probabilities for an ABC to the downside here. And an ABC can be part of a W, an X, and a Y triangle and up. You can have a sharp W, X, Y, right? You can still even have a flat ABC. It's just that the probabilities are higher to still move up sooner or later. And then we'll see when that happens. Rug pull Wednesday. Oh, imagine going from 70K back to zero. Missed a call from the FBI. Yeah, I guess. I also don't recognize the number, so it's not a number I have in my phone as well. So I don't really know. It is a +31 number though, so that is a Dutch number. I just don't know. Weird 5-second order block. Yeah, it's messy price action here. 5 seconds order block, by the way. What do you think is now the right time to go in a long position? Depends on your plan and strategy. I don't give any signals, of course. I do share publicly areas of interest in the Koens Setups channel in Discord. If you don't see it, go to the Koens Trades channel. Just follow the steps there. But I do share areas of interest, and I explain why that is, so that people learn how to trade Elliott Waves. But I never really say when I go or long or not long or So yeah. Is it the right time? Depends on your plan or strat. If you see what you want to see, then yes, there is no reason not to go long. If that's part of your plan, your strat, you are happy with what you're seeing, your probabilities are in your favor, you're trading your edge, you should go for it. So, and if it's not the case, then of course don't. I rarely ever communicate about the positions I have, what I do. Per se, I do aim to educate people in Discord on how do you actually trade Elliott Waves, which is what I do with the Koens Setups channel, where I share, hey, I'm interested in this long, I'm interested in this short, because, and then I write down the why. Okay, from an Elliott Wave point of view, this, that, pop, and that is why this is interesting. Do I eventually take it or not? Well, it depends on the reaction that we get in certain areas, right? Doesn't mean I take it, but it helps to people to understand why something is relevant and why it isn't, which hopefully helps them in their trading. So, what's the time, by the way? We've been live for 1.5 hours. It is time to go soon, though. Where's my planner? Yep. Yeah, for me as well. We'll be set up with the news of NVIDIA and ETH approval. Am I correct? We will see if you're correct. It's all probabilities. But 66K, that's all the way down here. Yeah, currently the probabilities are higher, right? As we speak, are higher to take 72K before possibly one day 66K. If you take 72K, the probabilities of course increase to go for the all-time high, but you do have one more area of resistance above the blue box, 73.1 to 73.6. Just above 73.6 is all-time high, yeah. So I would agree. Yeah. They can be a Mars low probability. Right now, probability is high to possible top position. To take 69K and possibly 67 before moving up. The longer this range continues, the lower the probabilities become because of the potential for triangles. But yes, I mean, for a bullish scenario, if this is a 1, 2, and 3, wave 2 hitting the 886, low probabilities for a wave 2 to hit the 886. So that increases probabilities to sooner or later take the low. However, the longer you range, the more we also have to think about the potential of triangles, which is not really something that I like. I don't really like triangles in general. Very complex structures, very annoying structures as well. But in that case, you're making higher lows, and then this low does not become a 2. It's an A, B, C, D, right? W, X, A, B, C, D, E, and then you continue. And in that case, you can get an 886 touch because it's not a 2. It's a corrective structure in a triangle. And you create high, low, high, low, high, low, high, low. So I do prefer to, if we do take it, and it shouldn't take too much time. Or X is a triangle, yeah. It's always the shit with triangles. Is it Y? Is it X? Right? Like, is it B? I think a triangle can be part of so many structures. Is it 4? Right? Is it 4, 5? Is it Y up? Right? Is it X down? You know what I mean? Triangles are very, very annoying structures from an Elliott Wave point of view. They're also very complex, and they're actually quite uncommon. They don't really appear as often. When you can pull two trend lines, right, that are converging, doesn't mean it's a triangle. It's the subwaves that create the triangle or not. But locally here, yeah, there is that potential. We moved up impulsively, down in 3 waves, and now we're moving up again. Do you own any crypto, or do you just trade Bitcoin? I have small portions here and there, but I mainly trade Bitcoin. Yeah. So I'm very much a trader type of guy. Yeah. You missed my request. No, I said it's for an altcoin live stream, which is on Sunday. So I'm very strict with the planning of the channel, as it's mainly focused on Bitcoin, and then on Sunday, every Sunday will be altcoin stream. And if I can't on Sunday, it's going to be Saturday. And if I can't in the whole weekend, it will be another day. But there's going to be one a week, and that is the moment where we go into altcoins. Okay, everyone. Well, I think that's gonna be it. No, that's gonna be it. It's time for me to fly as well. Do some other stuff still. So let's see what price is gonna give us locally here. What's this retracement? 786. Yeah, there is the potential here. Diagonal. This looks more like a 5 waver than a 3 waver. I have to go, but I'm also interested. Looks more like a 5 waver than a 3 waver. X, Y. But ending a wave Y here doesn't really work. W, zigzag, X, Y. That's an incredibly shallow Y as well. Not taking the low. Yeah. But if this is a wave A or 1, B or 2, 3 or C, then how can we make that bearish? Good question. If this is the low of a corrective structure, and this is an A1, 2B, C3, then what is it? Zoom in and say it. Of course, if you have a diagonal, it's always leading either in a 1 or an A. It's more like, what does it mean for the corrective structure? It's going to be something to think about. Not sure. Might as well continue. Main area of resistance is up here. It's this box here. 78 to 71.1. Only above this is a daily left. 71.4. And then you go for new highs and go to the next resistance area. However, if this is a 2 and you want to move up impulsively, it means this has to be a 1. But if that's the case, you're going to end the correction here, which has to be some sort of a WXY double zigzag, but this is very short for a double zigzag. Yeah, 0.618 is an absolute minimum target, really. So I don't yet see. That's not the low on Binance. No, I'm talking. What I'm not sure. What we're talking about in this case is if this is a 2 and you go up in 3, then this has to be your low for a 1, 2, 3. So the question simply becomes, what's this low in a bullish scenario? Because in a bullish scenario, this then has to be your low. As in, it's not the low on my chart, it's a higher low, but it has to be the end of your corrective structure. So you have a correction, and if this would be 1, 2, 3, you need to somehow end the correction at this low. But we would then need a WXY. Has to be a double 1, 2. 1, 2, 1, 2, and then up. Yeah. A, B, C, 1, 2, 1, 2, and then you want to move up. Bullish CVD. I mean, we do have bullish CVDs. But volume starts to increase. Yeah, then you want to see a big wave 3, of course. Yeah. Double 1, 2 is a possibility. That would be, of course, very bullish. A, B, C down. And if this is your end and you go for a double 1, 2, then the bigger double 1, 2 will get a higher probability, right? Where you have 1, 2, 1, 2, another 1, another 2, 1, 2, 1, 2. You expect a very big move in that case, right? Oui. No. There is a bipartisan majority in both chambers. The future is very bright. 1620. Oh well, we're gonna find it. We're gonna find it out. We're gonna figure it out, right? So, area of interest. If price does not show any weakness, if it does move to the upside here, we're simply gonna look for higher, and it would mean weakness would at least mean stopping here, moving sideways, possibly some bear CVD, market structure changes, volume to the downside. We have bullish CVDs here. We have bullish CVDs here. A double 1, 2 would be a wave 2, 886 touch. That's not ideal. So, yeah. Passing this resistance. Yeah, probabilities, of course, increase to move to the next area of resistance. So, yeah, might be. This starts to be a complex structure. So this has a higher probability of an ABC. So that's something. So definitely more interested to look for upside. The question is, are you finished or do you get a bigger three-wave structure? Yeah. Definitely possible. Oh well, we're going to see what's going to happen with regards to the chart, and I will provide another update later today as well. So let's see where price is later today. So yeah, if we take the local highs, it's still corrected. Oh yeah, if you take these and move down, just X. Yeah, we're gonna see. We're gonna see. So I mean, naturally, after an ABC, you at least expect a bit of a move to the upside or create a range. But yeah, if you pass this resistance, I mean, probability is higher to move up, really. So interesting double 1, 2 though. Your first wave 1 is horrible as well. Like 1, 2, 3, 4, 5 doesn't work. You have overlap here between 1 and 4. So then what? W, X, Y. I'm very unhappy with this being a double 1, 2. Can't deny, but because this is an 886 touch, rare for 2. What the fuck is this as a wave 1? Right? So in this case, you need 1, 2, 1, 2, 3, and then what? You don't even have another high locally, a lower high. So you probably you would need to go for 1, 2, 3, 4, 5, and the overlap is then a corrective overlap. But it's the 56 lows were even worse. Yeah, those weren't pretty as well. But at least at 56, we then got a range to the upside with increased bullish CVD, and that was a good sign to start moving up. That is, we do have some bull CVD here, here, and here. We still got bearish as well. So at 56, we also had an 886 touch. Yeah, CVD was key there. Yeah, absolutely, it was. Yeah. It's not pretty, but it can work. It's the same here. This was also not a pretty 1-2 at all. In like if you want to count this in detail for a bullish continuation. So the ones and the twos have been pretty complex. Makes it interesting. What's up, Legionario? How you doing? So interesting, no? But yeah, I do have to go and do other stuff. So pump or no pump, it will happen after the live stream. Maybe tonight, I would usually upload a video. If we do have some crazy price action, I'll go live again. Could be interesting. We do have some news, of course, tonight as well. But yeah, I do have to move. So that's that. So thanks everyone for being here. Let's observe the price action. Right, see how it acts. If it does move to resistance, let's see if it holds, and if not, we're going to be looking for higher. So take it level by level, and yeah, interesting range, interesting range. 886 touch there, some ugly wave ones. Heading to the south of France will still take some months. If you sell a house, it still takes a while before people move in and you move out and stuff. So bearish CVD, but also bullish CVD, Rob. So it's a mix locally. So we have both. So yeah, everyone, thanks for being here. Let's see what price is going to give us. Probabilities, of course, still higher to move to the upside. Probabilities are higher for an ABC locally to the downside. But do we get an extended corrective structure or not? That's a little bit maybe short summary. On the weekly time frame, probabilities are higher for the bullish scenarios. On the more local time, 4-hour time frame here, probabilities are also higher for the bullish scenario, where we are looking for price to move to the upside sooner or later, either 4 and then 5, or the double 1-2, 1-2, 1-2, another 1-2, and a big wave 3, right? Locally on the 15 minutes, probabilities are higher that this is a corrective structure to the downside in an ABC because of the length of this move to the downside, or the length of this range, sorry, compared to the first move down. And then the main question is this your end and you have now 1-2s and you move up, or do you get a bigger 3-wave corrective structure? That's at the moment very difficult to say because this range is taking so long now. And we have bullish CVD here. We do still have bullish CVD here, but we have bearish here. We might be invalidating the bearish one soon, no? So it's going to be interesting. So trade safe. Trade safe. So thanks for hanging out, and I'm going to catch you at the next one.